Income from your portfolio is one of the most important parts of investing, but not all income is created equally. Investors who understand where their cash flows come from and why possess a powerful advantage. Welcome everybody, and thank you for joining us at Acadium After Hours, where we take a little bit more of a relaxed look and unwind and talk about some of our experiences as financial advisors, and along the way, hopefully help you to become a better investor. I am Frank Heisa, co-founder of Acadium, and over at the West Coast of Florida office, and today I'm joined in the studio by Lindsay, co-founder of Acadium over at the East Coast Florida office. Lindsay, it's great to see you here in the studio. Always good to see you.
Thanks for having me, Frank. Always good to make the trip over here.
One of the biggest things that people are worried about these days is how expensive everything's gotten. Inflation. You hear about it all the time. We usually measure that inflation rate by CPI, the Consumer Price Index. Mm-hmm. So I'm going to begin our conversation today with a pop quiz.
Okay.
Going all the way back to 1926, there's one asset that has growth rate that has never failed to beat CPI. Over 30-year rolling periods, back to 1926. Can you name what that is?
Take a stab here and say dividends from equities?
The growth rate. You're right, the growth rate of dividends from equities. And since that's true, and you and I recently have been talking about how understanding dividends is a key differentiator between, let's say, successful investors and everyone else. Can you explain then how dividends work and what they are?
So dividends, very easily, companies that we do business with every day, your power company, NextEra, the gas station you go to, Amazon, they all make profits, right? We know that we pay them a lot of money, they make a lot of money. And they have a choice. They can either take these earnings and they can put it back into the business, they can buy back shares of their own company, or they can pay a portion of that back to shareholders in the form of dividends. So kind of like rent from a rental property. It's just a cash flow return.
How much are we talking about, and typically how often do investors see those?
Typically, it's about once a quarter, and some companies, you can see very minimal dividends, and some companies might pay 40 or 50% of their profits back in the form of dividends. It depends upon the company and where they are in their cycle. So it's broad spectrum there. And
cumulatively, when we think about over the long term, investors having dividends coming in, how much of an investor's long-term total return is attributable to dividends and reinvestment of dividends?
Gosh, I think if you went back through time, I think you'd be surprised. It would be close to a third or more of their total returns, but somewhere around there. Yeah.
Percentage.
So although the dividends percentage-wise might not be eye-popping like some of the long-term returns you see on the things like the S&P 500, the compounding of those numbers and the growth of those dividends are very, very meaningful.
So let me ask you something about different ways that companies who are profitable dispose of those profits to their shareholders. Obviously, dividends are one option. Mm-hmm. People may be familiar with share buybacks or just simply reinvesting. The companies who aren't paying the dividends, they're not necessarily stagnant, but they may be reinvesting all of that back into growth. What are the relative merits, or why would dividends be appealing to a long-term investor compared to some of those other methods?
Well, the good thing about the dividends from a shareholder standpoint is now you have the option. If you choose to, you can reinvest those and buy more shares in the company. Or you could take that money and buy another company. Or if you need to, you can just use it for your own income purposes.
I think that's a super important point. And also along with that too is that dividends tend to be what we call stickier to the downside, right? They tend to over time be less vulnerable to market declines than the prices themselves.
Absolutely.
And what we see is, when markets do decline, that dividends tend to be, the dividends either do not decline, or if they do, they decline temporarily or in a much more minor fashion. Why do you think that might be?
We have to remember dividends, it sounds like an investment term, but it's really just profits these companies are making, right? So during bad times, Frank, if you get a flat tire, are you still going to buy a new tire?
Yes.
Okay. Does the tire company make money?
Yes.
Okay. In the summertime, if the market's bad, are you still going to run your air conditioner?
Definitely.
Okay. Is that company going to make money?
Yes.
Okay. You still going to use your phone?
Yes.
Okay, I think I've made my point.
Yeah.
So on and on, all the companies that we patronize, they're still making a lot of money. So the fact that the stock market may be down doesn't mean these companies aren't making a lot of money.
Got
Okay.
it.
And dividends are nothing more than a return of some of these profits. That's why they're much more stable.
How does a company, if they did want to, like economic conditions were really adverse to them, how would a company even go about reducing their dividend?
They do that. First of all, companies do that all the time, but it's always a last ditch effort. Okay.
Yeah.
Companies from a branding and public relations standpoint, they don't want to be seen as the company that reduces their dividend. It's a bad sign to the market. So a lot of times companies, they will be conservative in the amount of money that they pay out, meaning they have several quarters of dividends in reserves, and they have the opportunity to tap into that during downtimes. So when you see a company cutting its dividend, it's probably a really bad sign for that company. But that's also why we diversify.
Yeah.
So if you went out and said, look, just give me 3 companies that pay the highest dividend, now you run the risk that one of those companies runs into trouble and can't make their payments. But that's why we diversify, Frank, so that we capture the growth and the profits of thousands of companies, not just a couple.
And that's why also we see that in a properly diversified portfolio, right, through time, dividends are extraordinarily smooth. They're
Yes.
rising and they're smooth.
Yes.
So that's something that I think behaviorally adds a lot of value for investors. Since we're talking about investors, if we could, I'd like to kind of pick your brain on how we think about dividends within a portfolio. So if dividends are so great and we like them so much, then, and this might sound like a trick question, but why don't we just build a portfolio out of stocks that pay dividends?
Well, unfortunately, just going out and selecting the highest dividend paying stocks, although it sounds like that's the best thing from a mathematical standpoint, a lot of companies that maybe aren't paying the highest dividends now or don't pay a dividend, they will in the future. And there's companies that pay very high dividends. Some of them will continue to do that. And some of those companies will have to cut their dividends or go out of business as well. So there's no such thing as a sure thing there. There's no way to just say, look, I want to make 8%, find stocks that pay 8% dividends, and I'm guaranteed to do that. Not the case. So, but dividends, they are super important because, again, it shows that we're owning companies that make money. Okay. Now, the dividends aren't 100% of the profits. It's a portion of the profits. So these companies are paying us, as shareholders, our money back, as well as reinvesting in their own company and the dynamism of capitalism that comes with that as well. So it's really a win-win.
Last year, and you celebrated 30 years in the industry. You have a lot of experience in one, the theoretical foundations of how capital markets work, and 2, how to work them into real life financial plans for people, and finally, how to communicate those ideas to your clients. So with your years of experience, I'd be interested to know just how you think about dividends, what your perspective is as an investor, and how it informs the way you think about risk.
Well, when it comes to the dividends and risk, it's always a good sign when you can see a company making money. A dividend is a sign that they're making money. So again, we talked about not owning necessarily the highest ones, but it's a positive sign that earnings are being returned. So if we own companies, profitable companies at a fair price, we're probably going to do well over time. What I look at, though, with my clients, on their statements, a lot of people, we get their monthly statement, they see some fluctuations when the markets are volatile. It's up, they're excited, it goes down, they're concerned. And I get that. I'm the same way, I'm human. But over the long run, on your statement, there's another section called income. Now, your income isn't just the interest from your fixed income or your money market. It's actually dividends as well. And over the long run, you mentioned earlier how stable those numbers are. So if we point back to a client's statement from 3 years ago, 5 years ago, 8 years ago, you will see much steadier numbers on the income side, quarter to quarter, year to year, than you see fluctuations in the statement. And at the end of the day, that's the check that you're cashing. Right. So if you're moving from accumulation, working hard, saving for retirement, and you're moving into those period where you're starting to think about, hey, I'm going to downsize my work lifestyle, and I want to start collecting a check. How am I going to do that? That's what you want to be looking at.
Yeah.
And it creates a lot of comfort with clients because if that money is going to be there, and historically speaking, it's been much smoother and much more consistent and reliable, That's what I look at on the statement. I don't worry about the fluctuations and the craziness of what's going on in the world. I know these companies are making money because I use them every day.
I think too, like jumping off of that, when you're working with someone with a very long time horizon, then the best investment strategy isn't growth or income. It's growth of income. Right? We have to continually grow that income. And as you successfully identified in our earlier pop quiz, the one single asset amongst the entire spectrum of investment assets back to 1926 that has managed to unfailingly beat CPI is the growth of dividends. I think that if someone's truly risk averse over the long run, or they have long range financial goals, that should be supremely interesting to them, right? Where can I put the money so that I can have a better lifestyle in the future? That is the whole point of investing.
Can't add to that, Frank. That's perfect.
It's always good talking shop over a drink with you. Any parting thoughts regarding dividends or how clients should think about income in their portfolio?
Well, number one, when things start to get tough, you start seeing a lot of bad headlines in the media for whatever reason, especially with elections coming up. Just always go back to what goes on a day-to-day basis. These businesses that you patronize, they all do so at a profit. That's not going to change. If I need a new car, I'm not going to wait until after or before the elections. I need a new car.
Right.
And they're going to make money on me. I want to own businesses that do that. So just always keep in mind what's going on in the real world, not what you see on TV. And number two, I would spend much more time in reviewing my statement on what are my income numbers looking like, not the market value, which fluctuates all over the board, even with conservative people. So if you look at your income number year over year over year, you're going to be much calmer. You're going to make much better decisions.
Well, again, thank you so much for your insights, Lindsay. Always great to see you. We hope our conversation today has helped you think a little bit differently about dividends and investing, and if so, that your investing experience is better because of it. And if you have any questions about dividends, income, or your portfolio, then please don't hesitate to reach out to us. We'll always make time to help. This has been Frank Heisa and Lindsay Hansen with Acadium Financial Partners. Thanks for watching. We'll see you again soon.
Thank you.